Good morning from Limassol, Cyprus. Today is just another Magic Money Monday. Now, today is really an important day, and it's the start of September. It's the first trading day of September. We are in for a big treat. There's going to be a lot of fundamental events this week. We've got the sentimental ones too, so it should be a really interesting time. Now, aside from it being the first day of the trading week, the US markets are closed for trading, but there should be some kind of volatility kicking in. Last week we ended a bit on the abnormal side, and we should be going into normal trading commencing from today. I got a couple of trades running already. This is one of those morning meetings that we're going to start doing regularly after the 15th of September. We're going to be doing them live instead of a video format once I have my whole thing set up. We do have really good setups on a number of assets. Lots of charts showing good indications. Right now is my first trading review. I got my new beautiful screen right here helping me out. And I've got 3 trades running: USDCHF sell, US30 sell, and NZD/USD buy. I'm going to explain them in detail and do a bit of more charting. It's showing me a weak dollar so far, what I see, based on the charts, but remember, we are reactive to the market. So what we see now and what we see in a couple of hours might differ, so we might get out of a couple of trades. On another note, we are going live today at 1 p.m. GMT. Now we're going to be doing trading and tips. The US is closed for trading, so maybe volatility might die out in that evening time, but anyway, we will be preparing for tomorrow as well. So let's go into my chart here and let me show you what's going on in the trades that I've just taken. Right, so before I go into the actual chart, I need to show you this here. So this is my path to 6-figure trading monthly returns checklist. So the first thing is we do a complete market scout. That means we check all the tradable pairs on the broker that we're using. In this case, I'm using Blackwell Global, so I'm a little bit limited with the assets, but it's okay. I've got the majors, Euro pairs, GBP pairs, down under pairs, metals, and everything else that I need. Anyway, generally, the process is this. First of all, we're going to be locating a contraction. That's number one. So I'm going to show you this on USDCHF. We're going to be checking the vertical and horizontal trend lines. We're going to be making a review of the indicators after that's done. After we check this, we're moving into checking for patterns and candlestick analysis. And finally, we're going to have to know the fundamentals and sentimentals for the next 10 days. Then you see that little blue writing there, it says review probabilities. So what we're going to do is we're going to check where price action could take this asset. Now when we're done, we're going to check before the entry, we're going to define a definite exit area, and we're going to confirm the exposure, it's spelled wrong there, and execute the trade. Now I've already done this, but I'm going to show it to you anyway. All right, so this is USDCHF. This is the actual first trade alert that I've released this week and this month in our community. Now, remember, a very important thing that I need to explain to you guys here is that the trading community, the PipsMatter community, is not about just getting alerts. It's about teaching you to trade. So if you don't want to learn to trade, if you just want to drag on the alerts, then this place is not for you, because I want to teach you guys, in essence, to fish for yourself. Anyway, so what we're going to do first here is we're going to locate the contraction. Now, this one is on a 1 hour. TP is quite close. It's not too far away. It's looking good. I'm going to show you right now exactly what we're trading here. So this is the 1 hour. Before I go into this, I want to just share with you the tools that I'm using, the indicators. So the first one here is RSI. You can see it's set to 13. The next one is an EMA set to 13, and then the Dow chain channel set to 30. The Dow chain channel is the orange thing you see here. Anyway, let's start drawing this contraction here. So we got a bit of a fake out up here, in my opinion, and I'm going to show you the probabilities after this. So this is the contraction. We have a small breakout of it. I'm using the bottom levels of support here and here to form the bottom level, and then we're going to be checking the vertical and the horizontal support levels. It's going to be pretty simple to do. It's not something very hard. oh, actually, before we do that, let's go over the take profit for this. And the way we set it is pretty simple. Fib retracement, we get the bottom for selling, get the top, and there's our take profit, which lines up with this support level right there. You can see that there. So what I'm going to do is I'm going to draw this here. There's our take profit. An important thing to understand is that this here, the 23.6 and the 30% are major important support levels. And you can see them line up here and then almost right there. So that's pretty important. Now, when we finalize the pattern review, we can see that there could be a possible little channel forming maybe here. We're just going to smaller this here, make it smaller, change the color of it to something lighter. Now, because this is a gap, I'm going to remove it. And this is something that I see now. Ideally, we see that the 50% lines up with this possible support level to the side, which looks good. It looks pretty good. Now, you don't need a lot of time to do this, to be honest with you guys. It's pretty simple to do. It doesn't take too long. And I'm just taking a bit of time just to show you everything. So we're going to do this here. We're going to put it in light blue, make it smaller. And we're just going to line up the key resistance support levels right now. So clearly this is an important level up here. So a possibility of a double top. This is what I mean by probabilities, by the way. But we're going to come to that in a second. So we're just going to map out all possible levels where we could face a problem on our way to profit. So the two here, they're self-explanatory. I just told you already, they're based on the pattern, high and low. The blue ones are the ones we drawn by ourselves. And that's pretty much it. So we have the sideways ones, the straight line ones, and that's it. Tutto finito. Moving on. Now, the next thing we want to do is check our indicators. So RSI, this is just an hourly one, so it's not that important. RSI coming, sorry, one sec. Coming off here, a pretty nice level. Just give me a sec. Just give me a sec. Okay, so RSI coming off the overbought area here, the 70 level, looks pretty good. The last time it was there, it rocketed down, and we were actually profiting on this in the community. You can verify that by just checking the alerts and comments. Now, an important thing that we want to do here is go on the 4-hour chart, because that's where I'm focused on the EMA on the DC. Let me just show you this quickly. So the DC and the EMA are important on the 4-hour chart more than on the 1 hour. Also the daily. So on the 4-hour chart, the RSI is in overbought territory, which is really good. Now you can see that we have a nice reversal candle here in my books, a strong green candle followed by a new high, and then a close in the red indicates good selling opportunities. So that's it. You can see that the DC is far away from price, which indicates that there could be a correction to the downside, and that's a really good thing. The two best things that we can see with the Dow Chain channel is, number one, it being close to price action, then it's easier to break out of, or if it's very far away and under our TP, means the correction could happen right to our take profit. So that's the review of the indicators. All looks good. Now we're going to go back to the 1-hour chart, and I'm going to show you a continuation pattern here forming. So that's a beauty of a move here. Now check this out. We have the bottom. We get another contraction forming. Now the previous candle indicates reversal, a nice little possible reversal candle. So that looks good. Now what I'm going to do here is I'm going to take this bottom, take this top, and what do we see here? We see a possible 23.6 or 30% resistance level. 36 minutes to confirm any kind of movement here. So this looks good. Now this is an education session. Keep that in mind. So we check the patterns, the candlesticks. There is no specific pattern. There is more of candlestick things. But in a sense of specific patterns, I only trade one what I mean by patterns is head and shoulders, things like this, just to support the trade idea. Fundamentals, well, there's nothing really happening today. And the basic point here is that our take profit is really not that far away. So from here, even where price is, to down there, just 50 pips. So US markets are closed for the day. We shouldn't see much movement. I mean, there shouldn't be anything that can move the markets except sentimentals like Trump tweeting or something like that, that could move price action. Now the probabilities are we could have a double top, we could have a breakout up here, we could reverse back down. So because we don't drive the markets, and our technical analysis is just a supportive of an idea, we need to understand the probabilities, because my trading system is a reactive trading system. It kind of gives me, it indicates to me what could happen and what could go wrong. Now, one very important point after we finish the probabilities is to locate a dead end point. A dead end point is right above this level here, especially a close anywhere above here. If price action closes above there, above this trend line, above this high, then this pattern for now is dead until we do not continue to analyze it and find something solid. In regards to the TP, 50% or 61.8, 50% for me is more than enough right now. I got about 3 lots running on this sell, which is really good, a good reward. The risk reward is 1.78 right now, which is fine for me, and I do expect this pattern to hold, but I'm not the judge nor the jury of this. An important thing about technical analysis, by the way, is that technical analysis works because the market has a memory. That's very, very important to understand. Now, when technical analysis doesn't work, I usually call that abnormal market movements, and usually there are corrections in a day, 2, 3, or an hour, or a week, which we could take advantage of. Now, I don't want to run this video for far, far too long. I just wanted to share some education here, and just generally get you guys going in with our system. Now, on the screen, you're going to see right now a couple of examples of some patterns that we use, such as contractions, how they're supposed to be, how they're supposed to look. And the other pattern, the free X pattern, which is free lower lows, or free lower highs, or free higher highs, or free higher lows. Generally, that's pretty much it I've got for you right now. 13 minutes, we're done. Thank you, and I'll see you soon. Bye.